Hey, Map here, Map Investments. So, I want to talk to you about Tilray and how to set up a calendar spread. So, I saw Tilray was having a lot of call action today, and the tape looked pretty good. Some of the wheat stocks were going up: Tilray, Alphria, Canopy, Hexo. So, there was some movement in the wheat section today. So, I saw Tilray had a lot of call action. Tilray right now is trading at, it was up $1.60, almost 10% to 19.32. So the options in Tilray, um, the current IV, let's take a look at it here. Oh, saw wrong one over here. Let's trade. Let's change this to Tilray. The IV rank is 8, so it's relatively low. So the strategy that's recommended in a low IV is to, you really don't want to be selling premium in a low IV environment because it's counterintuitive. You want to buy or do strategies that when I say buy, it's a debit. So you want to buy strategies when IV is low and sell them when it expands and it increases, and vice versa. If IV is high, IV rank, you want to be a net seller of options and receive credits. But if there's not a lot of credit to be had, don't make sense to be a net seller. So hope that clarifies that. So the main rules when looking at options is you want to pick an underlying that has good liquidity and a good bid ask, not big wide ask and bid. You wanna make sure they're tight. Penny, 2 pennies, max 5 cents, but you want to try and stay away from that. And then you want to look at the IV rank. In this case, Tilray's IV rank is 8. And that'll give you your gauge whether you want to do a buying strategy, a debit strategy, or if it's high, a selling strategy or a credit strategy. Okay, so in this case, let's take a look at the table, right? So the calendar spread, you want to technically stay. You want to sell the front month, and I'll show you on this table here. I just wanted to make sure I was looking at the right ones I got. You basically want to be between, 16, 17. Basically, this is perfect format for this trade, in my opinion. 23 days is the one you want to sell, more or less. 23 days, 16 days is good, either or. I went with the 23 day, the May 20, this one right here, right? And what you do is, so when looking at this, you're making a directional assumption as well. And I kind of did it out of the money. They recommend you do it one strike, basically not in the money, but the next one that's in the money. So in this case, it would have been 19 and a half, would have been the calendar that they recommend. The 19 and a half would have been the strike that they recommend. But if Tilray goes up too much, then you lose money on your trade. You lose what you paid for, is where I'm trying to get at. So I kind of, I like the calendars. I like skewing them, kind of more of a directional bias. That's my thought process on this trade. But you want to also look at the data and get some numbers to come up with your theses. So in this case, let's say Tilray is trading at $20 because it's at 1932. Let's just round it up to 20, right? And the expected move is 4. You can see that right there under the gear. It says 397. That's $4. So that puts you at 24. But we all know that weed stocks can pop and sometimes move outside of that move. So what did I do? What did MEP do? So I basically went all the way to 25, and I sold the 25. So what you do is you hit the bid here, boom. That's what you're doing. You're selling the 25 for the bid is 71, the ask is 79. So we'll get into that now. So that's that, right? This is the front month you're selling, the May. So now we're gonna go out into June and give ourselves more time. And you can see in June, the move is $5.20. So you're gonna go over here and you're gonna hit ask, boom, and you're gonna buy that one. So that's how the trade looks. And this will cost you 68 cents is the mid price. 68 cents, which is $68 on a one lot, on one contract. If you want to look at the curve, here's how it looks on the curve. That's basically how it looks on the curve. Oh, something happened here. Sorry. I was trying to kind of squeeze it in so you can see it. It usually looks like a tent. There you go. It's a tent, basically. So this is the trade in Tilray. I wish I had it on my Thinkorswim platform, because I could tell you what the max profit would be. But a rule of thumb is you want to manage the trade at the front month. So at the front month, we collected about 70 cents, more or less, I think it was. So that's where you want to manage this trade, basically. I'll do a follow-up video on this one because I just put this trade on. I paid for it 71 cents. Yep, 71 cents I paid for it. I wish I had the analyze tab here. I don't know how to do it here. I don't think there is a way to analyze this trade as I can do it on the TOS platform. Yeah, it's not really showing me like I do it on the TOS platform. But I just wanted to give you a sense of what a calendar spread is. Obviously, if it doesn't move within that range, then you lose the debit that you paid. So you need it to come close to your strikes to start making some money. I hope you enjoy the video. This is a calendar spread. It's a low cost trade in a low IV environment, and they're not sexy or anything like that. But you only pay what your debit is, and it's an engagement tool. But I've done well with them in the past. Anyways, like the video, share it, and I'll see you in the next video.